Hey guys, this is the Crypto Cowboy, and coming to you on YouTube here with a small educational video regarding the triangles. And basically, it's going to be titled "How to Trade a Breakout Out of the Triangle." And I've done a couple of examples before, but this one I think it's going to kind of put pretty much all the questions that are out there regarding how to trade one kind of at rest. And obviously, if you guys have any comments or any questions, leave them below and I'll be happy to answer them. So here is what we're looking at. I wanted to, there was something that we were watching over the weekend for the past, 2-3 days into the crypto market, and we were particularly looking at the IOTA. So this is a coin in the crypto market, and we've been kind of monitoring the development in this 45-minute chart of this triangle. And into the trading room that we've opened, I was suggesting to our clients how we can trade this. And there was another example regarding the BSV where we're waiting to get into a trade, but the IOTA chart was pretty clean and pretty nice to trade. So as you can see up here, you're pretty much having a move, being more than likely a third wave advance up here that's been coming from, anywhere below, I think, 20 cents. And after a strong move like this, you're looking at the market and you're saying, you're noticing this kind of side consolidations take a shape of a triangle. So, anytime you spot something like this on the chart, there's a chance for a nice opportunity. So, there are several types of triangles. I go about it in kind of extensive explanation into my Elliot Wave course, but one of them, it's the barrier triangle. And, when we talk about barrier triangles, is basically you have wave B and wave D finishing up at the same level. And the way we count this is you're going and you're seeing a wave A down, you have a 3-wave move. It's an ABC, very small C wave up here. Then you have a B wave up, and then you're doing more of a complex corrective wave in C, which is characteristic for the triangles. Usually wave C or wave D are complex, a double zigzag most likely. And you're looking at this leg C, and then you have D and E, right? So even though this leg E can extend a little bit more, the way you should trade a triangle like this, it's basically you want it to be able to get on a train as soon as this E wave is over. And the only time you have confirmation that it kind of is if the market starts moving above this D wave top. All right, and especially in a situation of a barrier triangle such as this, where B wave is at this level, basically you're breaking out above these two. Because if this wave B was a little bit higher up here, or it would be a running triangle, where wave B goes up here, then this could still be a D wave in development, and then you would have to wait for a break of the highs. But it's a personal preference risk. But the way you would trade is you would wait for the top, for a break of this D wave top, and then you would open up a position. And you're looking obviously for something impulsive, and that was the characteristic up here. So at the moment I saw this, I'm telling the clients, I'm saying, hey, there's an opportunity here, so I'm not going to trade this because I have exposure in other markets, but it could be something interesting if you wanted to take it. So this is and I've kind of pointed this as being the target because, the way I do that is I measure, you have to take the top of wave A, and then and I've done a lesson about this. If you guys go on my YouTube, I think, training videos, you'll see a lesson about how to properly measure the triangle. So you take and you run this CA trend line down, and then you measure for the top of wave A all the way down to the trend line. And then you take this measurement and you project it from here and you go up, and that should give you at least a minimal target of the breakout of the triangle. So you buy on the breakout of the wave D, and then where you're wrong in this trade, because you got to know where you're wrong. It's if the market comes back and takes this E wave top, E wave bottom down, and then you're going to be wrong on the trade. So you got to make sure that you place the stops, not right, a pip below this or a Satoshi below this. Give it a little bit of a room, just in case there's like a silly spike down here or anything like that. So make sure you leave a little bit of a room up here, but not too much. Okay, you want it the moment we dip below here, then the trade is definitely wrong. So you're waiting for this to happen, and then you want to see what's going on. So you buy the breakout, you place the stop, and here is where we go next. So the way you do this trade, so you enter into it, and this would be the minimal target. And that is obviously the top of that green. That would be at least, that's where this would go. So that's why I placed. I think TradingView allows you to do this, right? So you place the stops, and then, and this is not a 2-to-1 ratio or even 3-to-1 ratio. It's probably 1 to 1.5. So still a trade that I would take anytime because I think it's got a solid setup. So you're placing the stop below this wave E. Now you can notice the market came. And you see to my arrow, you buy up here, and as it is most of the times with the breakouts, usually you get a retracement. So if you don't want to necessarily buy the breakout of the wave D, you could wait for this to be finished and just buy a pullback in a wave 2. Okay, so that's another thing. Sometimes markets just keep going higher and you don't get much of a chance, or you're reducing your your risk reward ratio. But if you want to wait for a pullback, that's perfectly fine as well. So this is your risk, and then this is your profit. So let's see what happens next. That's how you get it. The market never touches your stops, and you can notice that the market starts moving back up higher. So you're almost at the target here. You're letting the trade develop, obviously, to keep going up higher. We're almost reaching the top of our targets, and then look at the next slide. The market punches through. So the triangle is clearly been confirmed. You have a 1-2, and now you're doing another 1-2, possibly 1-2, 1-2, and then you should get a stronger wave up here. So now if the target is already reached, one of the ways to protect yourself is by moving the stops higher. So what you want to do is you want to take the stops and even move them below some kind of a low that's that's in the move. If you go to a smaller time frame, if you want to be more aggressive, you can start and place them somewhere down here. Again, leave a little bit of room up here just in case you're getting some kind of a flat, right? You can have an ABC coming down, and they can stop you out. But you do want to leave at least a position. So let's say that you're entering up here with 2 positions or 3 or 4, and you take 2 off the table at the target, and then you want to always leave something for a run higher, because most of the times this is just an initial target, and triangles can break out much higher, and the continuations could be stronger. So if you look at the next move up here, you're getting even a stronger move. Now notice how the market just kind of came back and came just slightly below the stops right there. So if you were to place your stops very close, you would have been tagged and stopped out, which would have been fine, but it still would have been a profitable trade, but probably not as profitable as the one that it's actually exploding up higher, for the real move. So like I said, always be careful with your stops, and also always make sure that you leave a position to enjoy some move to the top side. And then if you look back to the next move, you can see the market went even higher, and we've reached way more than 3-to-1 retracement. Multiple or risk to reward ratio, where you've kind of risked this much and you were able to make that much. So since then the IOTA came back. You could raise the stops a little bit higher here, go into smaller time frames and look at some of the swings and just kind of trail your move up. And then just since that moves out of a triangle are always kind of terminal moves, that the market is going to reverse sharply lower. So you kind of have to be prepared and trail your stops. And if I go back to a real-time chart, this was a pretty nice trade. And if I go back to a real-time chart on IOTA, this is where we are right now. You're doing pretty much an ABC down, or you're doing the first leg of a W, you have an X wave, and then you're doing another ABC, and possibly you're embarking into the next leg higher. So this could basically be just leg 1 of a larger move, or it could be wave 3 of a larger move, and now we're waiting for it to kind of come back, maybe towards the bottom of the triangle, and then look for opportunities to re-embark and go back up higher. But this is how you trade a move out of a triangle, and how you kind of follow through with it and make sure that you stay profitable towards the end. And in the future I'll have more examples like this. But if you guys enjoyed it, just hit the thumbs up, and so YouTube recognizes that you guys like my content. And leave any comments if you have any other ideas, any other suggestions. There is a way, obviously, to get prepared, and I'll get into that one into a different video, but just in case this whole move is part of a triangle that will break to the downside, you got to be prepared to do this, because if this is just a wave A, and then this triangle is it's actually a B, okay, where it goes like that, then you're looking at this being an A, B, C, D, and E, and then you're breaking lower into a C leg. Okay, so this could also fail and go the other way, and you always have to have a game plan for both of them. This one was a bullish one, and it broke nicely and it gave a nice reward, but sometimes these are part of a larger correction and you get an ABC. So with that, I hope you have a great trading week, and don't forget to hit the thumbs up. Come into our trading room, it's open. You can see the subscription below, where I have more examples like this, and we're going to take more trades based on different setups. I do regular video updates and charts, and clients seem to like it, so hopefully you guys come over and give us a try. So thanks for watching, and I'll talk to you later. Bye.